So about 2 weeks ago, I told you guys that if the SPY could stay above support at 668, then you guys should look for a run to 673 and then a run to 680. And along with that, I gave you guys the possibility of the S&P 500 forming a lower high just above 683, which is exactly what happened. And let me go ahead and mark that for you guys. So here we got a top, and our next top is going to be right here. Now, even though the S&P 500 is currently forming lower highs, what's not happening is the fact that we're not forming lower lows. And in fact, we are forming higher lows, which could be telling us right now that the S&P 500 is not ready to crash. Now, these two zones that I just draw, you guys can see that we're just consolidating between 668 and 689. And with that being the case, there is a scenario in which the S&P 500 does end up playing out like this, which is a head and shoulders pattern. Now, once I go ahead and draw this trend line, you guys can see that every time we do end up touching this trend line, we do end up getting a pullback. So if we do end up getting this move above 689, we're possibly going to head straight into that trend line, which we're then going to reject once again. Now, once I go ahead and create a bottom trend line, what you guys see right now is a rising channel, which could also be referred to as a bearish rising wedge pattern. So in definition, a bearish rising channel pattern, which is often called a ascending channel, is a chart pattern that shows prices trading in an upward sloping channel between two parallel trend lines. Now, while the prices is moving higher, the pattern can signal a loss of upward momentum and potentially lead to a bearish continuation or a reversal if the price breaks out of that channel to the downside. And that would look something like this. Now, if I go ahead and draw a trend line from here to here and then another trend line from here to here, what you guys are now looking at is another version of a bearish rising wedge pattern, which usually ends up playing out like this. Now, something that I want to point out to you guys is the fact that we still have more space inside of this rising wedge, which means we could see more price action towards the upside before eventually pulling back down to fill these gaps down below at 573 and at 532. And guys, that is the bull case if we do end up bouncing off this trend line. Now, once I go ahead and erase all of that and then draw these trend lines, what you guys can now see is a bullish broadening wedge pattern, which ties into my thesis that we could see more upside before eventually getting a pullback. And if you're not familiar with this pattern, it usually plays out like this with a breakout move towards the upside. And as you guys can see, it happened here. And recently, it also happened right here. And with all that said, if the SPY cannot get above resistance at 672, then look for a pullback down to 667. And if 667 breaks, then we're looking at a pullback down to 665. Below 665, the bear's next target to the downside is going to be at 661, which from current price, we would be looking at a decline of over 1.6%. Now to the upside, if buyers can get the ETF above resistance at 672, then I want you guys to look for a move back to 680. If they can get the SPY to stay above 680 and break this trend line, then I want you guys to look for a run to 683 and then a run to 686, which from current price, we would be looking at an increase of over 2%. Now, going into the rest of the video, I have some important levels for you guys to watch on ticker symbol SOFI, Sofi Technologies, and Marathon Digital, ticker symbol MARA. Let's begin with Sofi Technologies, ticker symbol SOFI. So first things first, I want to let you guys know that I am bearish on Sofi's stock, and I'm overall looking for a pullback down to $17 per share, which from current price, we are looking at a pullback of over 37%. With that said, during the market's last trading session, Sofi stock was down over 2% and is now sitting above support at 27.30. If buyers cannot keep the stock above this level, then look for a pullback to 26.50. If that level breaks, then look for a pullback down to 25.28. And below 25.28, the bear's next target to the downside is going to be at 24.30, which from current price, we would be looking at a decline of over 12%. Now, to the upside, if Sofi stock can stay above current support at 27.30, then I want you guys to look for a 3% run back to 28.82. And if the stock can break and stay above this level, then look for a run to $30 per share, which from current price would be a return of over 7%. The next stock is going to be Marathon Digital, ticker symbol MARA. So as you guys are looking at the chart, what you can see is two bullish falling wedge pattern. Now, one ended up breaking towards the upside, which is exactly how the pattern should play out. And the second one ended up breaking towards the downside, which is not how this pattern should play out. So in that case, I do believe the stock is gearing up for a move back towards the upside. With that said, during the market's last trading session, the stock was down over 6% and is now pulling back to support at 11.29. If buyers cannot keep the stock above this level, then look for a 13% pullback down to 10.33. And if 10.33 breaks, then look for a further pullback down to 9.83, which from current price would be a decline of over 17%. Now to the upside, if the stock can stay above current support at 11.29, then look for a 4% run back to 12.47. And if the stock can get above 12.47, then look for a run back to 13.68. Back to 13.68. And above 13.68, the bull's next target to the upside is going to be at 14.95, which from current price, we are looking at a return of over 25%. Now, based on my overall analysis to the upside, I will be looking for the stock to get back to $17 per share, which from current price, we would be looking at a return of over 42%. Alright guys, before I do go ahead and end this video, let me know down in the comment section if you guys like when I give out different possible outcomes on the S&P 500, or should I stick to my original format of getting to the point. With that said, thanks for watching, and I'll see you guys in the next one.